Hello guys, the coin, I'm back again, and the reason I'm back is because you need to watch this, guys. So I was just, taking a look at what happened with the 1929 stock market crash, and I just made a copy. I just made a copy of the bars pattern of what happened in 1929. It's it, it's it, it's almost fucking incredible, you know. Take a look. So there was not much data, because basically the Dow Jones had been around since 1925 or whatever, but we can check it out once again. So there's not much data. So it first started around yeah, since 19 still goes back. Thought not, but so 1915. So the data on the Dow Jones starts at 1915 or 1914, December 1914. So that's when we got the first data. And basically what I did is I went here, I went to the bars pattern, but now I want to see this move here, since this until the drop. Right? That's what I did. That's what I have showing you up there. But yeah, it's crazy, guys. The patterns, the bar patterns that we're experiencing in the market right now is completely ridiculous. So let's check out this one, which has a little bit of more bars. So let's put this one here. Yeah, I guess it didn't catch it. It's basically the same thing as the other one, so forget it. We have this already in here, but look at the similarities here, guys. So basically this move here is this entire move here, I guess. It's this move here. So it was here. Here we start to level out. I guess it had another peak, which we don't see right now, and then it dropped, like in this area here. It dropped, right? Dropped. We went higher. Then we had this drop here, like we were seeing here, and then it started to move onwards. Look, even this kind of M shape in here is here. Look. It's this here, or is it? Yeah, it's this here. This is this, and we'll take a look at this here. This is this. So I'm just taking into comparison because like I said, these bars, they're so similar, man. They're so fucking similar. It's incredible, man. So this movement, and we can almost put it here side by side. Damn it! No, it's gone. Yeah, this is a hard one to do, especially when to do it logged. But I guess there's no other way. Or is it? Yeah, there is no other way to show the scale. Yeah, but let's put it like this. Look how similar this is, guys. So we're taking a look at data from around, I guess, 1927 or 1928, and this is what we're having the last years. So this is 2011. So it looks like before 1929 This must have been 19, I don't know, maybe 16 or 15 or whatever. Take a look. We had a drop in here too, so it topped out in here. It bottomed out in here, then it started to make its bull run, like kind of like in 2011 here. We had a little dip here. We continued to move. We had some kind of an M in here as well. Maybe this is it. This is the little M here as well, the little M. We continued up. We had a kind of a little dip, only represented by one, or kind of this one. This must be it. And then we reached the top. Crazy, man. Crazy how similar, man, these bars are, man. It's just freaking incredible. So according to this, you know, if we put that into perspective, and if we shall put the last stock market crash of 1929, if we put it at scale, because this is at scale, that's why I put on the log. You know, look how similar that is. You know, that this part is from here, then it had kind of a peak here, which didn't happen, but it had this drop, and then it started to rise, kind of like in here. So we had this top here, which coincides with this one. Then we had a kind of a double bottom here, which is shown here as well. Yep, look, just take a look. Kind of a double bottom in here, exactly the same. Then we started to go up. We had this kind of little valley. Maybe this is also part of it here. Then we started to go up, continued to go up. I guess we met here. We had a little dip around this area. We had two dips, so here is one, here is the other one. I guess this one is not very well represented. So why am I showing you this, guys? So what happened in the Great Depression of 1929, the stock market, or the Dow Jones, because there were no other indices back then. The Dow Jones, you know, and the Nasdaq is much later. It must have come on in the 2000s. The S&P only started around 1978, if I'm not mistaken, according to the historical data that I found. So this is what I'm seeing here, and what happened between what happened in that crash of between 1929 and 1932. What happened back then? And I touched this on the last live stream. You know, no, but I just started to investigate, and I just couldn't let this go. So date and price range. Let's use this indicator. So basically, what happened here between the top it's not quite a scale, I guess. It's not quite a scale. So between the top and the drop, so it roughly took 128 days, and the stock market lost 94% of its value, which is not true, because the Dow Jones only lost 89% of its value. So just for that reason alone, I guess we can't use this data. But we can't use the top and the bottom, which was 89%, but we can take a look at what happened here. So let me just go back again. Let me just go back. Just go back and just put this right. So this is what happened between 1929 and the bottom of July 1932. So this move took 3 years. The Dow Jones lost roughly 89.60%. And that's why I wanted to make this comparison, because you know, if the charts play out like they are, and once again they look very similar, man. The similarities are just astonishing. They're just freaking astonishing, you know. How it mapped out kind of what happened in 2008, 2007, 2008 with this drop here. Now it started to went up, and then we had the peak. The only thing that is different about this chart is that the market didn't correct it as much. You know, just taking a look, the market didn't correct as much. Correct to the upside as much. So basically it topped out. It had its bottom, like we can see here. It has its recovery, like we can see in here as well. Then after the recovery, it was just crazy. Bam. A little bit higher than the low, went up, bam, down. A little bit higher, bam, down. Till it bottomed out. So this is what I wanted to show you, because if history is about to rhyme, and like I said, man, these bar patterns, you know, it's not a fucking coincidence, man, because how crazy is that these patterns, so we're talking about the bars pattern of 1929, the 1929, and we're seeing the exact same thing. We're seeing the exact same thing almost to the tick, with some differences here and there between the actual stock market. It's incredible, man. It's really incredible, man. Just take a look at this, like this kind of double V here. Look, V, kind of that top here, top and little double top. The third one actually went a little bit deeper, but look, they're just so similar. It's just fucking crazy. So imagine that. Imagine that the stock market is about to drop another 89%. In the last video I was only talking about 80%, but let's just imagine that in the next two years the stock market will, or the Dow Jones will lose about 89% of its value, man. Just imagine that. No, just take a look at these bars pattern, man. It's completely incredible, man. Look at this. Look at this here. Look at this. Just take a look at this here. Complete insanity, man. How is it possible? You know? So let's imagine that stock market is going to take a dump of 80, or the Dow Jones is going to take a dump of 89%. Do you imagine that? No, because unfortunately I can see it. So we see kind of double tops in here. The market was already bottoming in, was already topping out. This must have been first. Then it kind of wicked down. Here are recorded 2. Here is only 1. Maybe we can consider this one, the last one here, which was actually smaller. Topped out, had the first crash, like we can see in here. So the first crash brought it in here, corrected up. This time it's correcting it's correcting up even more. Or maybe if we're talking about scale, maybe it's almost the same, but you know, it corrected. So then, if this is going to play out kind of the same, let me just put here the 1 day. Yep. No, look, just look how similar these charts, man, are. It's just freaking incredible, man. So if this is going to play out like this, so we had this dump, we're now topped out in here, where it's starting to go down. So basically what we need to do is we're going to come roughly to this area here. It will dump roughly to 819. I guess this where it kind of will land. So around here, I would say. Yeah, I guess kind of around here. Then we had another. We will have another big little pump, maybe back up here, and then we're going to drop to this place, and then we're going up. Look how steep that was. The stock market back then lost 89% of its value, and take a look how similar, man, the chart looks like to what is happening right now, man. This is really incredible, man. So if history is about to rhyme, you know, it's going to be a hell of a few months that is actually coming on. But let me just try. No, it's harder to do it daily, because to go back to 1929, I guess it's doable, but if I can just make a scale of the daily instead of the weekly, because it's much harder like that. Let's see if I can do it. Man, but the similarities are just freaking insane, man. And I just mapped out some crashes that happened, you know. This was this top here from 1973 to 1975. The stock market lost 46% of its value. So by now, or when the market crashed the first time, it lost already 38% of its value. Back in 1913, in the first crash, it was 40. So we're 2% short of the percentage of the first crash. Yeah, let me just take the alligator out of here. So this is the one from this is the one from 1937. From 1937 to 1938. So this move just basically took a year. It's just freaking incredible how many times that has been happening throughout history. So 50% it lost in here as well. And I guess this is the one. This is the big one. Here we are. Here we are. So the top was August 1929, and the bottom was made on July 8th, 1932. Okay, so maybe this will be better to do it as scale, I don't know. So let me try to copy these. Bars pattern, so yeah, let's make it from this to the dot, this, okay. Okay, this is it. So let me try to move this to our recent days. Go back into the weekly here. Now I'll be able to do it. This will play out better on the daily instead of the weekly. Yeah, here we are. We have already arrived. Yeah. Yeah, now we can actually see it better. But if you take a look, take a good look of it, look. This this top and drop here, we can see it clearly here. This kind of zigzag going on, and then the consolidation which happened here as well, and then it dropped, and then it came to this high, I guess, and then it started to move up like this here in here, but it still went up a little bit higher. So let's take a look at the correction after the dump. Didn't went as high as we are now, but still look. Look how similar that is, man. How similar that is. It's crazy, man. Really crazy shit, man. Yeah, really crazy shit, man. But yeah, if we must take into consideration this chart, and once again, so the stock market, the Dow Jones lost 89% of its value, man. 89% of its value. So should we expect kind of the same? Because I'm putting the top in here, although I have to measure it again to see if this is 89% or if it changed again. Let me just check. So the price range. Let's see if we get, yeah, this time it adds up. This time it adds up. So let's put it like this. So is this going to happen again this time? Is the Dow Jones going to drop to 3,027.5? Look, the similarities are undeniable, man. Look at this. Even this V shape here, or this W shape in here. Look. Kind of a consolidation going on here as well. Look. Is this what we should be expecting? You know, because I don't believe in coincidences, you know, I'm tending to believe that might be the outcome. If it's going to take 3 years like it happened the last time, let me just take a look at if this was coming true. Let's see how long it would have taken. So this would take the other one. Let's use the date and price range. Okay. Date and price range one. Yeah, but I have to put it from here to the top. To here. So what? 154 bars, 1,078 days. So that would put us in 300, 600. Yeah, roughly about 3 years. About that. I guess it's actually right. So let's imagine this could happen. I don't know, man, but like I say, you know, just take a look at this chart that we're having right now, and the ghosts, the ghost bars that happen here. So kind of had this little W in here forming as well. So I don't know, man. This could be the reality in about 2 years, and if the drop has already started. So if this is the case, we are going to have another low. We're going to have another low. Yeah, but this is on the weekly. Let me put this on the daily. Yeah, because although we also have to take into consideration that this move is apparently happening much quicker than in 1929, so it already topped out here. It took longer here to top out. Let me just make the measures again. So we already topped out. It took actually a little bit longer. The stop should be made at around 28th of September, but we already topped out. So if we would follow this timeline here, which looks like it's happening actually faster, but you know, so yeah, so that means that we should see a lower bottom on 28th of May 1921. 2021, but like I said, this move is actually kind of happening faster. It's happening a lot faster. Because I don't believe this is it. Or is it? Is it? Are we still in this formation here? Because it didn't drop that much. It didn't drop that much. It went almost to the highs. So if this is the case, we still have this phase here to see. I don't know, man. But this is crazy shit, man. And this is just, I just want. I'm just entertaining myself with this idea, man. But it's crazy, man. It's crazy how it comes together, man. Could it be we're still in this kind of formation? Dropped a little bit. Dropped a little bit. And then we kind of moved by. Maybe this is. Maybe we still didn't even got the big kahuna yet. Or one of the big kahunas, I don't know. I don't know if we're still in this pattern here or if we're already in this one. I don't know. Yeah, who the hell knows? Maybe we're still in this little pattern here because the drop hasn't been very significant. Well, 38% is a lot, and it actually coincides with this move, so maybe we're already in this one. So I don't know, guys. I just wanted to make this live stream to check this out because this is absolutely crazy, man. Absolutely crazy shit. And once again, if history is going to rhyme, man, oh yeah, we're in deep fucking trouble, man. Deep fucking trouble. No, just take a look at this, guys. Just take a look at this. It's fucking incredible. It's how similar this chart is. So, man, crazy shit. Okay, guys, I just wanted to show you that I'm the coin.